Hey traders, welcome back to Trade with MadFx, where I keep Forex trading simple. In today's video, I'm going to show you one of my absolute favorite ways to catch consistent winning setups every single week using simple daily levels. I'm breaking down a real example where I caught multiple trades, so you can see how one setup can give you multiple opportunities. I will walk you through exactly how I found the levels, show you top-down analysis, and explain why I took these trades, including what time frames I used to enter my trades and the confirmations I used before entering the trade, and how you can use the same approach to catch winning trades week after week. Keep watching till the end. I will show one currency pair where this same setup is happening as we speak, so you can be ready to profit when it moves. Let's jump straight into the charts and get started. Let us start with the daily time frame. And as you can see, the daily chart has been in a downtrend for a while now, creating lower highs and lower lows. And we want to follow the trend. Let us now focus on the most recent price action in this area. Let me zoom in a little bit for you. Recently, we saw that we tried to break to the upside, but it was not able to sustain the momentum. And after that, we had a huge move to the downside, and that created a bearish break of structure on the daily. Now, what are the expectations after a bearish break of structure? Let me give you a visual representation of the market structure. Once we get a bearish break of structure, the market will leave behind an unmitigated supply zone. So, the expectations are that the market will come back to collect orders from that zone and then continue its expansion to the downside. And we can use that unmitigated supply zone for our entry, put a stop loss above that zone, and target the next break of structure. This is how we use market structure to trade a continuation of the trend. Let us now apply that to our chart now. This was the huge expansion move that gave us a bearish break of structure on the daily chart. And on its way, it would have left some unmitigated supply zones during that move. And now we expect the market to come back and give us an entry in that unmitigated zone, and we will look to capture the next expansion to the downside and target the next break of structure. Now the next step is to find an unmitigated supply zone on the daily chart for an entry. As you can see, the market has left two supply zones on its way down. Let us start from the top. This is the first supply zone that the market left. And as you can see, market came back to that zone, mitigated it before going down. So we will cross out that supply zone and move on to the next one. This is the next daily supply zone. And as you can see, this has not been mitigated yet. So we expect the price to come back up, collect orders from this zone, and give us the entry. Now that we have identified the direction and created a trading plan using daily time frame, let us go to a 4-hour time frame for our entries and break down exactly how to enter our trades. This setup alone gave 3 trade opportunities in a week, all using the exact same daily plan we just walked through. Let me break down all 3 entries for you one by one, along with the trading plan and confirmations that back them, so you can capitalize on them too. This is the daily supply zone that we have marked, and it is pretty wide. So let us refine this zone on 4-hour time frame. This is the zone where an expansion to the downside initially started. Now let us mark the order block. If you'd like a detailed breakdown of how I mark my order blocks, just drop a comment down below and I will make a separate video on it. Now, what are the expectations? We expect the market to come to this 4-hour zone and start selling from here. So, our first entry would be to directly enter here on this 4-hour supply. Put our stop loss above the supply zone. And this would be your first target, which would give you 1 to 6 risk-to-reward trade. I took this trade, and here is the screenshot of my trade based on this particular entry. Of course, the final target based on daily chart would be this particular low all the way down here. If you are a swing trader, you can hold that trade for a long time. I am a day trader, so I prefer taking my 5 to 10 risk-reward trades and then looking for the next potential entry off the same setup, which is exactly what I did in this scenario. Let us jump to second entry opportunity that this setup provided. First entry happened on November 3rd, which was Monday. Let me delete this first entry and see what happened after that. So, we had this break of structure on 4-hour chart. Then we had a huge expansion move to the downside after mitigating the 4-hour supply zone that we marked, and that expansion move was finally able to give us a close above the 4-hour low, confirming a bearish change of character. Now, what do we expect after a change of character? We expect the market to come back to an unmitigated supply zone to give us a sell entry and continue its expansion to the downside. In this particular scenario, market only left one zone on 4-hour chart, which was unmitigated. And that is the zone that we will enter from for our second entry. This is where we will enter. Our stop loss will be above the 4-hour zone, and our target will still be the same. And as you can see, this gives us a risk to reward ratio of 1:6. And this second entry happened on November 5th, which was Wednesday. Now let us move the third entry provided by this setup. Let me delete this and see what happened after that. As you can see on the chart, it tapped into the 4-hour supply zone to give us the entry. And then it gave a huge expansion move to the downside. And that move was able to give us another bearish break of structure. Now what do we expect? Same thing as before. We expect the market to come back to an unmitigated supply zone and then continue its expansion to the downside. Let us mark the unmitigated zones on our 4-hour chart. Starting from the top, this is the supply zone from where the huge downward move started, and it is unmitigated. So, we will enter at this 4-hour zone. Stop loss would be above this supply zone. And as always, we want to give a little bit of a room for our stop loss. And this will be our target, which will give us a risk to reward of 1:5. This particular entry happened on November 10th, which was Monday. So, in just a matter of 1 week, this play gave us not 1, not 2, but 3 amazing plays to capitalize on. Now, we already know from our daily chart that this is our final target. So you can use any of these zones as your targets. And as you can see, it has already reached this target, and soon it will reach to our final target as the trend is on our side. And like we saw on the daily chart, we expect it to give another break of structure to the downside. But before that happens, it will give us another potential opportunity to enter. Let us take a look at that now. Let me delete all these drawings first. So, after another expansion to the downside, this was another bearish break of structure that the market gave us. And it has left an unmitigated supply zone on the 4-hour chart. As you can see, this supply has not been mitigated yet. So, I will wait for the market to come back here, and will use this 4-hour zone for an entry, putting my stop loss above the supply zone. And I will be targeting either this level or the final target level, which would give a risk-reward ratio of 1:7. Alright, quick update from the future. While I am editing this video, the market has already came back to this 4-hour supply zone to give an entry. And so far, it has been working really well. And I think by the time you would be watching this video, it should reach our final price target. Now, as promised in the start of this video, let me show you one currency pair where this same setup is happening as we speak. This is the one. This is the daily chart, and as you can see, recently we had a bearish break of structure on the daily chart. So now the expectations are that it will come back to an unmitigated supply zone on the daily chart and continue its expansion to the downside, giving us another break of structure to the downside. And for entries, you can use lower time frame confirmations by going to the 4-hour chart. But before that, let us mark the supply zone on the daily that is unmitigated. Now let us move to the 4-hour chart and see what is happening here. As you can see, we have been uptrending nicely on this time frame and slowly approaching the supply zone that we are interested in. Once we mitigate the supply zone, we will look for confirmations before we enter and catch the huge selling move that comes after our confirmation. And again, it will give multiple entries before it reaches its final target. So keep this currency pair on your watch for coming weeks. Finding setups is only half the battle. Watch this video next, where I show you how I narrow down which order block to use from multiple order blocks. the exact time frames I use, and some powerful order block tricks you can start applying immediately. It will help you improve your win rate, open doors to higher risk reward, and level up your entire trading game. No guessing, no confusion, just a clear process you can follow every single time. I will see you there.